Michael Lee Strategies founder, Michael Lee. And Mike Lee, let's start with this sort of same conversation, right? We've got a great chart, and it's showing that 61% of active money managers last year actually outperformed the market. That's that yellow dot, folks. But you see the yellow dot now, the yellow dots after that, this is the first time that they've outperformed since 2009. Has something fundamentally changed with this market, where it actually now does give an active money manager like yourself an upper hand, so to speak?
Yeah, absolutely. First of all, it's much easier for active managers to outperform in a bear market. And so, you pay somebody to protect you, because when the market's going straight up, all you need to do is just be long the market. But in situations like last year, what particularly happened is the big names and all the big indices fell out of bed. So if you look at the whole market, as our buddy J.C. Peretz likes to say, the top was March, April of 2021, and the bottom was June, July of last year, where the peak for the FANG stocks, Apple, Amazon, Google, Netflix, Microsoft, what have you, all those mega cap growth names, their peak was December 31st of 21, January 1st of 22. And those fell out of bed last year, and those have massive weightings in all the indices. So if you don't own those names, it's very easy to outperform.
Right.
So that's what you have going on. And then in choppy markets, which I think we're going to have for the next couple of years, it's much easier.
Right, but that also gets to really the crux of the question, right? Passive funds have major exposure to those, and while it's fun on the way up, it can be really tough on the way down. Because what makes it go up, these stocks go up, the funds have to buy more, they buy more, the stock goes up. When it starts to unwind, it ain't pretty. I want to ask you about something else. Elon Musk put out a tweet, and it says that there's too much power concentrated in the hands of these shareholder services companies like ISS and Glass Lewis, particularly when it comes to like these major funds we just talked about voting on major issues in corporate America. Do you agree?
110%. If you're buying an index fund, okay, I am not giving my votes for board members or major shareholder issues to BlackRock, State Street, or Vanguard. Okay, I want exposure to the market, and I'm not giving up. If you're an index fund manager, if you're a passive manager, you should not be able to vote. Okay,
right.
You should not be able to pay somebody like Institutional Shareholder Services to vote, because what's happening is you have some form of communism and ESG taking over the world, and they're using their passive money management to take over, because in a bull market, these long-only ETFs are fantastic. In a bear market, not so much, but there's a tremendous amount of money in indexing, and for most people that are just plopping away in their 401k every other week for a couple of decades, you can make a lot of money, you can do really well. But it is being used against against a lot of the best interests of the shareholders and the economy, in my opinion.
Right. I'm glad you brought that point up. This is something I want to keep talking about, because there's so many things that are happening behind the scenes that people don't know will impact their life at some point. I also want to note, I think we have you down as liking Tesla as well, but we're out of time, Mike. Thanks a lot, buddy. Talk to you real soon.
Thanks, Charles.
All right, folks.